You won't believe this. The gap between the richest and poorest Americans has now exploded to a jaw dropping 526% gap. The top 10% of US stocks control a record 78% of the entire stock market cap. And if that wasn't enough, the Trump administration is pushing massive tariffs on everything from pharmaceuticals to kitchen cabinets. Inflation is sticky, inequality is surging, and the middle class is getting squeezed like never before. But here's the real question: what does it all mean for Bitcoin? Let's break it all down. So, what's up, family? It's Coach Masi, and you're locked into the Daily Hodl. As always, this is not financial advice. It's for educational purposes only, but it's here to help you think sharper about money, markets, and most importantly, Bitcoin, because that's what this channel is about. Let's start with this eye-popping stat. The income gap between the top 25% and the bottom 25% of earners in America, well, it's now hitting 526% in between the middle. That's crazy. Let that sink in for a second. That's not just a little imbalance. That's a full-blown division between haves and have-nots. And here's the kicker. This isn't just about one group working harder or smarter. It's structural. The person at the bottom rung isn't just making less. It's that their income is essentially stuck in neutral while inflation keeps chipping away at every dollar they earn. Their paycheck buys them less food, less gas, less rent, really less everything. And when the cost of living goes up, but your wage doesn't, that's not just difficult, it's a trap. Meanwhile, those at the top, they're not just earning high salaries, they're compounding wealth through stocks, real estate, private equity, and other financial assets that have exploded in value over the last decade. You see, inflation can make you rich if you own assets, like Bitcoin. Now, the gap widens not only because of income, but because of asset ownership. If you own assets, you win. If you don't, you fall further and further behind. Now let's layer on the second part of this story because it gets crazier. Right now, the top 10% of US stocks account for 78% of the entire market cap of the US stock market. That is the highest concentration ever recorded. For perspective, in the 1980s, that number was below 50%. Now, I'm a world history teacher, so in macroeconomics, I got a master's in, but this is why I talk about these things because I want you to know what it means. And it means that just a handful of mega cap companies like Apple, Microsoft, Amazon, Nvidia, Tesla, Meta, they're carrying the entire stock market on their backs. A small group of corporations is dictating the wealth outcomes of an entire nation. And if you're not invested in those names, you're missing the rally. If those few stumble, the whole market shakes, and that's dangerous. Now, why should you care as a Bitcoiner, you're probably asking? Well, because this level of concentration and inequality is exactly why Bitcoin was created in the first place. Bitcoin was built as a response to centralization and manipulation. In the traditional system, wealth gets funneled upward through wages that stagnate, debt that compounds, and inflation that eats away at savings. In the financial system, wealth gets concentrated in a shrinking pool of mega companies that dominate entire industries. But Bitcoin flips the script. It's decentralized, it's open to anyone with an internet connection, it can't be inflated away by policymakers or bailed out by governments, and most importantly, it belongs to whoever holds their keys. Think about that. In the world where inequality is exploding, where the rich get richer because they own assets that can't be touched, Bitcoin gives the average person access to a scarce, programmable, global asset that doesn't require permission. It doesn't care if you're the top 25% or the bottom 25%. The rules are the same for everyone, and that's one reason I absolutely love Bitcoin. That's why inequality matters to hodlers like yourself. Because every time the wealth gap widens, more and more people start waking up to the fact that the fiat system is rigged. And when they finally realize they need something outside that system, something they can truly own, that's when Bitcoin adoption really starts to accelerate. We have ETFs, but there's a whole nother level of game theory that's going to play out. Next up, let's break down the August PCE inflation report that I talked to you about earlier in the week. This is the Fed's go-to inflation gauge, the one they watch more closely than even CPI. It came in at 2.7%, right in line with expectations. Core PCE, which strips out food and energy, well, it clocked in at 2.9%. And that's the highest reading since, well, February of 2025. Now, at first glance, the headlines will tell you this is no big deal. Inflation looks like it's under control, moving towards the Fed's 2% target range. But here's the reality. Inflation isn't just a number on a chart. It's the lived experience of everyday people that are struggling. I know people that are losing their jobs right now, or right now. Now let's peel it back. That means groceries are costing more, rent is higher, medical bills are heavier, and energy still eats into household budgets. And the thing people forget is inflation compounds. A 2.7% increase today is on top of a 5, 6, 7, 10% hike over 2020 through 2025. So your dollar isn't just weaker this year, it's weaker than it was last year and the year before that, and so on. This is why people feel like they're running in place or falling behind. Wages have not kept pace with inflation. And remember, that wealth gap we just talked about, inflation is a silent tax that widens it even more. If you own assets like stocks, real estate, Bitcoin, you can write it out. Your assets tend to appreciate over time, even when dollars are losing value. But real estate can be expensive, but you could dollar cost average into Bitcoin every day. But if you don't own assets, I want to be very clear. You're living paycheck to paycheck. You're the one paying the price. Every trip to the store feels heavier. Every utility bill stings. That's why so many working families feel crushed right now. Even when the Fed pats itself on the back for managing inflation, sorry, it ain't happening. But let's zoom out. Again, for you, because Bitcoin thrives in exactly this environment, inflation reveals the weakness of fiat money. The dollar has no hard cap. Policymakers can print more whenever they need to paper over deficits or fund spending. That's why even when the Fed claims victory, your purchasing power keeps eroding. You see, Bitcoin is the opposite. 21 million coins max ever. Period. No politician, no central bank, no policy change can inflate the supply. The scarcity is what makes it the strongest hedge against inflation long term. It's not about whether inflation is 2.7% or 3% this month. It's about the fact that fiat is designed to lose value over time. Bitcoin is designed to hold value over time. So when you hear PCE is under control, remember this: control is a relative word. For people at the top with assets, sure, they're fine. For working families without assets, they're getting squeezed harder and harder. And for hodlers, this is just another reminder why we hold Bitcoin. Because Bitcoin is not just an investment, it's protection against a system where inflation never really sleeps. And this isn't conspiracy theory, this is fact. Those same houses from 50 years ago, they cost more and they're not newer. Now let's talk tariffs. The Trump administration is moving to double down on protectionist policies with some big announcements. 100% tariffs on pharmaceuticals, 50% tariffs on kitchen cabinets and bathroom vanities, 30% tariffs on upholstered furniture, 25% tariffs on heavy trucks not made in the US. You see, higher cost, plain and simple, can affect you because tariffs are really taxes that usually get passed down to consumers. That means more expensive medicine, more expensive home improvement projects, and more expensive transportation, all things that are already expensive. Now, the companies can choose to eat the cost on their own, but that will vary by company. So, this can worry the Fed that this can fuel more inflation pressure, while the Fed is trying to get inflation under control at the same time. So it's a tug of war, and ordinary Americans are caught in the middle, and middle class especially, they're hurting as well. So for Bitcoiners, tariffs matter because they highlight the fragility of the fiat system. The dollar losses, or loses, I should say, purchasing power as costs rise. But Bitcoin is global. It's borderless. It doesn't get weaker because of tariffs or political policies. If anything, it strengthens the case for having an asset outside of government control. So what's the big picture here? We've got wealth inequality hitting records, stock market concentration at extremes, inflation running hotter than expected, and tariffs that could raise prices even more. It's all pointing to a system that is fragile, stretched, and designed to benefit the few at the expense of the many. You see, Bitcoin stands as an alternative. It's scarce, it's transparent, and it gives financial power back to you and me. When you hold Bitcoin, you don't rely on policymakers, central banks, or tariffs. I'm trying to hammer this idea into you. You rely on math and code. Well, that's why holding is more than a strategy. It's a stance against a system that is broken. Let me ask you this. Do you think income equality and tariffs will push more people toward Bitcoin? Or do you think the majority will just keep playing the old system? Drop your thoughts in the comments. I want to hear from your perspective because it matters to me. This community matters to me. So make sure you like this video, subscribe to the channel if you haven't already, and share this with someone who needs to hear the truth about Bitcoin and the economy. Well, that's your Daily Hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.